inviting me and giving me this opportunity to talk. And I'm talking here for the first time, so let's see how it goes. So my name is Nargis Motorwala, and I'm a full-time trader now. Earlier, I used to be a computer science engineer in Silicon Valley, and then I got into this, and then now I'm doing this, trading full time. I post my trades and my analysis on Twitter. I think that's how Anka and I met the women traders. And I also run a chat room currently, no service, no paid service yet, but still, a lot of people ask me, how I do this, that. And so, a little bit of knowledge sharing is there. It also helps me to connect to people and, go from there. So this is just, educational materials and no trading advice here. So this was something about me. And what do I trade? Basically, I trade mostly the ES family, the S&P futures, XPX cash, and SPY. So that is my 90% of the trading. And the rest is, of course, there are the most moved stocks, FANGs are there. And then, these days there are a lot of FOMO stocks coming up. So if I see a setup, then mostly all these things come generally from my followers. Hey, what about this? I see this going up, this stock is up, GameStop was up. So if we see a setup, then we go and attack it. But mostly I was also, when I started this, I was also doing the same thing which I think most people do when they start, is go after every stock which is the talk of the town. Oh, GameStop is there, AMC is there, that is there. Then you are all over that's what I realized, that you're mostly all over the place. Then I sat down and thought, do I need to be all over the place? And the biggest question I asked myself is, why am I here in the stock market? So the answer is, did I come to analyze or chase after every stock, or did I come to make money? So if the answer is that I have come to make money, then you need to get focused. Focused in the sense that money generation will happen, if you follow, the rules and everything, all of that stuff is there, discipline, emotional control, everything is there. But you can make the same amount of money by doing your go-to setups and a limited number of stocks. You don't have to have 100 stocks on your watch list. Majorly, I only trade XPX, SPY, and ES, and that's about it. That gives me the best liquidity. I can get in and get out fast. In the morning, when today the market was down, I had an XPX trade, which I had taken on yesterday. Today morning, I got out with 1.6 credits on $1.6 credit on 20 contracts. Technically, I was done in the morning. I don't have to do anything else. So that focus and concentration is one thing which we need to get on to. So the question which everyone needs to ask themselves is, why am I here? To make money or to analyze things and, or chase out? So if the answer is, I'm here to make money, then get focused on a limited number of stocks which you like. The same stock will give you multiple setups on different time frames. If you are a trader, then that's more than enough, in my opinion, to generate a daily income or generate a consistent income on that one. And then there are other setups which are swings, which you can take it for longs. There's a setup on Apple. You take that trade based on a day setup, and then take it for a few weeks and let it go. You put your stop loss, and when you will get stopped out. As the trade is progressing, you can up your stops, take profit, ladder the profits. That's what I have been telling my folks who follow me in the chat room, that the market is volatile. So the best thing you can do yourself is ladder your profits. Take some profit at 1/3, then another 1/3, and then have the rest of them at a break even, and let it run to see how, if it can go to your final target and give you a good amount. For example, a GameStop, we did the same way. There are quite a few stocks we took which were very momentum in the market, like AMC was there, OCGN was there, Zoom was there. So laddering the profits not only gives you consistent income, but it also takes away a lot of pressure from the whole big position. Let's say you had 100 shares, and that may mean a good amount to somebody with a smaller account. Then if you keep taking profits on laddering it, 1/3 or half, or upping your stops, that takes away your pressure, because the main thing for traders in our business is protecting your capital. As long as you have your capital intact, you are in the game. Once you blew your account or something, or take a big loss, then it's very difficult to get back into the game. Loss of confidence, loss of money is a big hit. A lot of things can happen. So personally, and again, I'm still learning this, because at the end of the day, you are an emotional being. So uh, honing that discipline is one of the challenges, I think, at least I face on a daily basis. So one of the things which I do is, David, let me know when I switch the screen, if you can see that.
Yeah, I see a folder now, recents, with some files.
Okay, yeah. Okay, so yeah, let me do, sorry, if I make it a smaller screen to show this, then the presentation goes a little bit down. So what we need to do is talk about, I was talking about some of the things about observations. So the main thing which I do is, I have a 10 SMA on my chart, and on a daily basis, I know where the price is. As long as the price is above it, hugging near it, I consider that as a bullish trend. And the moment it starts to get below it, I feel that somewhat the momentum is getting lost, and there needs to be a little bit of a caution if you are long, depending on where you are long from. Now, in a strong bullish trend, see from here, this trend is a very strong, going all the way here. So at some point, it need to take rest. So it doesn't mean that this is a correction, or something bad in the markets are happening, but this is a regular. So as the stocks are moving up, they keep moving up, and at some point they start to return to mean, meaning they need to relax and let their indicators like moving averages and everything else caught up. So when they come down, this point is generally buyable. So you go again, buy here, go all the way up, and then same thing keeps happening. Now today we have the markets were soft when we opened in the morning. So I had this going in. So yesterday it went, no, again it went up, nothing happened. It again, failed here, but it came down here. Now, in my Twitter, I have this ES feed regularly posted saying, where ES is going, why it is going, what numbers to look for, upside, downside, and a layer of support zones. So what would I think here? So this is a potential support zone for me. Last time also price came here, some noise, and then today also, this is a 2-hour chart. So today also it came here and bouncing. Now we need to see whether this is a real support, meaning it will hold and price from here is good and would walk away from here to upside, or it may do like this and then break here and come down. So these are the things I watch. What price had done before, here, and then is it coming back? Yes, it did come back. And is it holding or breaching? So once if this area is breached, price wants to go down below, then it can be a bigger sell-off. And then for that, we need to be prepared. Okay, what will I do when this happens? What will I do when this happens? What will I do when this happens? So right now, price is in this tight range of these two lines. And from here, I exited my short, and then I did not take a trade, though I was tempted to take a long, but I was coming here to talk, so I didn't do anything. So since then, XPX is almost 25 points up. So 25 points up would have been a good trade. 2.5 SPY points from 383, something 383, I think. 2.5 points would have been good. And then, we see how it is going. So like that, observing the price action and what it is doing with respect to previous information. See the line we drew on daily also, it is coming here to support. And that's how we know. And so far, this 50 DMA is being held, and there is some consolidation going on here. Either this consolidation will, break down to the lower side, or it goes up to the higher side. Now, having said that, I predominantly use my charting on TOS, Thinkorswim, and TradingView. So it's if you are a charting person and you're using technical analysis to see where the price is and what the stock is doing, then a good charting platform could help you do some shortcuts, in the sense that Thinkorswim or TradingView provides a whole array of studies. You can just plot your SMAs or other indicators, whichever you favor, and then go from there. TradingView also is pretty easy to use. So the chart I was showing was from TradingView. So maximum of my analysis happened there, and it's very simple. Just a couple of SMAs I have there. Sometimes I have Ichimoku, and then just simple price action. When you look at the chart, what are the candles saying on a daily chart or on a weekly chart, where we are and how it is behaving? That information, once you know, then you can attach it to, say, some of your indicators, like a 10-day indicator. Like I said, the price is below 10 SMA now, so there is some weakness. That's why we are seeing some up and down. Overnight, the market is up. During the day, it sells off. So that weakness is there. Until that weakness is resolved, or that consolidation is resolved to one side, either up or down, we will know. So having those pointers would know. Other things which your platform, these days, a lot of almost all platform. I use TOS, TradingView, Fidelity, E-Trade. So those platforms offer a whole array of services. Like, they will tell you which stocks gapped up, which stocks gapped down, a whole screener, basically, what was the volume, which were the most active tickers based on the volume, which were, the most traded stocks, FOMO stocks, which was there. So based on that, in the morning, pre-market or something, you can get a list of those stocks. And if you were a scalper, then, like yesterday, RKT was, I think Robotics is the name of that company. RKT was very talked about. So it gapped up a lot. And then let's go again here, because I'm a visual person, and I like to talk showing it with the chart versus. So this is what it was. I can do this. So yesterday, yesterday was March 1st, correct? Yeah, so it gapped up here, right? 6:30. So the price closed here and it gapped up here yesterday. And then if you were watching this as a gapper in your watch list pre-market, then you know that this stock gapped up with a lot of, sorry, I think I may be wrong. What is the date today? March 3rd. So yeah, March 2nd was yesterday. So So it moved. So this whole thing was consolidation. So if you were watching, then this was something you were looking for to see whether, price would move out from here. And it did. The moment it did around 29-ish dollars, you go long and keep riding. See, it's going up, going up. Now, again, if you're looking for a secondary entry, either if you were a scalper, you just jump in here because it came down, and then ride it here. The first candle and the second candle is red. It gave up the gains. Third candle broke the low of this thing. So now it all came down here. And then this is a 5-minute chart. So from here, it's trying to reverse. So either you can take a trade here, or once this area was taken out, you go long here. See, once it goes above, it again comes back to test this. So now this has become an important support. Earlier it was a resistance. Now it has become an important support. It has gone up to, test the high, but again, see, it had no interest to go beyond this. So if the price has not gone beyond this, then this is a signal to at least book your profits. So suppose if you are long from here, right, then you would take out some of your, 1/3, let's say 1/3. 1/3 you took it out here, and then it came back up, and it is going back up here. Then you put your second stop loss here for your long, and then you let it go. If it was just a day trade or something, you could exit right here with all of this thing, or put a stop loss here below. So your stop loss has gone from here to here. Now it's going up. So once this price falls down, you would have stopped out with a gain from here to here, with some of your gains booked here. So that's a very good thing. So this is how I generally try to do, ladder it, so that you don't lose all of your gain, but you keep locking in as you go up. So, and see this candle here, right here, it made a very big candle. In my opinion, it got exhausted, moving from 25, 24 to 43. Yeah, that was what I think yesterday I saw. It was 78, 80% move. And that's saying a lot for a $20, $25 stock. It doubled in a day. So all the energy is exhausted. So if you had bought it here, or if you are thinking of buying it here, then the thing which you need to think is it right or is it wise to buy here, right? So the stock was here yesterday, and today it is here. It is already made an 80% move. So is my money worth putting in here? I would say no. Why? Because it's an 80% move already. You have run a mountain without stopping, without drinking water, without taking a break for an energy. You would be exhausted. And at some point, you have to sit down and rest. So this is what is happening. This is an inside day candle, and it is resting here. Now, what we need to see is this rest real, in the sense of, it will repair some of its technical, which has broken it out. See, the RSI had gone to, yesterday it went to 91, which is kind of very overbought. So it is trying to repair some RSI here. So that's why it's an inside day. Inside day would be the price is within the candle of the previous day. So it's good. It's not broken the low. It has not broken the high, and it's right in between. And then you say for another 3 days, if this generally this consolidation may happen for 3 to 5 days, and then price would break out at some direction. So if this was a very good bullish move, a real bullish move based on a good stock, then the price will break out to the upside, maybe do 50 or whatever the target is. If not, then it would come down and fill the gap. So those are the things which, so these days, most stocks are FOMO. Everything is going 50%, nothing less than a big number, I guess. So this is where I would say, think before you put in your money at a very big high. A stock has done, moved a lot of percentage, more than 20% or more than, you can scalp. Yes, you can, based on a 5-minute chart, you can scalp. You can short it here also, scalp, let it come down. All is good if you're a scalper for a few minutes or 15 minutes or 30 minutes. But if you wanted to take it overnight, then that's the question which you need to ask. Or you buy it once the price is above this, not when it is right here. Okay, so a decision needs to be made. What will happen, whether it will be here or it will be here. So this is just, the price is trying to rest here till it finds the direction it wants to take. If you are buying shares, then it's okay, maybe a few days of that, and if you know that RKT is a good company and blah blah blah, then you can wait for it to go out of this, or your stop loss would be below this, and you're good. But if you're an options trader, then that's a very tricky thing, because the price in this area would burn your premium. Okay, it will burn your premium. And if you were, say, you thought, oh, RKT is like going to the moon, the way the Twitter language is these days, it's going to the moon, going to Mars. Nobody wants to live on the earth anymore. So so then your premium is, and you bought, say, same week options, you bought the same week calls. So just today itself, the IV would have crushed. See, the moment it printed this inside day, your IV of your calls is crushed. And suppose it was expiry of March 5th on Friday, then you would have seen a 75% decay in the premium right there. So you're at a 75% loss already there. Or if you're taking a couple of weeks out, then also the IV crush would have killed the premium a lot. A few months out, yes, you still have the ability to save it, or work around something it, or wait for it 3-4 days of consolidation and go up. So if you're an option player, then in my opinion, this area which we talked about, I'm just going to a 30-minute chart, because if it has a weekly option, then you at least have 5 days. Suppose if you took it yesterday, it was Tuesday, so you still have 4 days worth of premium to expire. This would be a premium seller. You could sell a premium here. An iron condor would work best with strikes, a long put right here and a short call right here. And an iron condor would give you premium, in the time which it is traveling in this area, it would burn the decay. So when it was high, generally this is what I do. When it is high and I know that the price has no interest going up above it, and the price high was 43, I would have sold a 50 call credit spread for a premium, 50, 52, 50, 55 combination, and then let it come down. And when it came down here, so the support here is 26. So I would have sold a 26 short strike put credit spread, PCS, put credit spread. This would be bullish and my IC would be on. And in the time the price is traveling in between, my premium would decay, and that is what you want. And say, suppose I got a credit of $2 on the IC condor, and it is going down because the price is doing nothing. My premium, and come Friday, the price is still below this and above this, my iron condor would expire worthless, or 50% profit is still very good to book. So that's how we do it. And let's see where we are. So that's what I was talking about, the price action, to study the price action of what the price is doing, and objectively how to look at it, rather than thinking the price should do this way or that way. Let price tell you what it wants to do, or what is happening, rather, what's happening there, so that you can make a good judgment about putting in a trade. So always buying near the support would give you the maximum advantage, because you've bought right here at the support and your stop loss would be below. You could put your stop loss below the gap fill to be sure, or just below this 50 SMA. So this gives you an edge in having a smaller loss. And if you are going short, then if you shorted right here, then you have the advantage of having the stop loss again very close to the highs. That way, again, it almost a good idea to have small, it's a small loss, and then it will give you a maximum gain as well once it starts to come down. And that's why we say that trading is all about timing. The way you time your trade will, give you two things basically. One is an edge to get a better profit, and number two, you will be able to control your losses better. So having small losses and consistent gains is what is, a trader's way to go, because we want consistent gains. But these days markets are mostly GME, AMC, RKTs, where everything rockets up, everything goes up too fast. And the sentiment, what I see among most people is, oh, the stock is not moving. Why? Because it did not move, 20%. So a stock cannot move 20% every day, or even 10% every day. So having those mindsets, the way we are getting trained to look at stocks, is, in my opinion, not right. Because if you're losing your objectivity about the realistic things, that's when a lot of people are going to have losses, or when the market pulls back sharply, a lot of people can be bag holders there. One of the things which I wanted to talk about earlier when I was starting the presentation, but I got sidetracked with the chart thing, is after the Jan 2018 crash, Dale Pinker from Forex Analytics had noticed me calling out some numbers, and market was, that way. And he had asked me to come to interview on his platform, and I did that. And one of the things which I had talked about is, women in trading. So I live in Silicon Valley. I'm an engineer, and a lot of women, or actually every other person is an engineer here in Silicon Valley, and most women are highly educated in this area. I'm saying just in this area. They have graduate and postgraduate degrees. They have good positions. Some are managers, directors, holding good. Some are entrepreneurs as well. But whenever I used to talk to them, the one answer which always, hey, what did you do with this stock? Or what, what's happening in the stock? Or there was a war going on, or some political disturbances going on around the world, especially related to stock market or finances. I'm going to ask my husband, he does everything, or, or my father does it, or my brother does it. So women was, you are educated, you are capable enough, but this is one thing which you are not confident enough to handle, because maybe, whatever the way women have been trained over the years to, this is your department, you need to look this is their department, you need to look that. So one of the things which I had noted out was to, at least give whatever I'm learning or learned, or at least some bit of confidence back to the women, and at least wake up a few of them to see it's okay. If you're not interested in trading or looking at your finance, it's okay. But at least know about it, have some knowledge about it. Tomorrow, in case you have to look at it, then you know where to look, you know what to look. So you're doing everything around you. You're managing a good job, you're managing your kids, you're managing a home, you're managing your home finances. Why not this? Why not this? So that was one of the things. And this field is again a taboo for women. I have noticed it also, and I faced it too. It's tough to break out into the circle and get in and talk about it, or other people welcome you, or think that earlier I used to get comments, oh, she's a woman, what does she understands, they don't have a clue. So slowly through my work, people started recognizing, noticing, and then now they're confident enough in my analysis to say that yes, she has something. So I'm not saying that everyone go and become an analyst or something, but know your things. It's not rocket science. Everybody can learn it, and every woman should too. And so yeah. So this was another example of the ES. So this was the high we had made, and from there it pulled back. So this is the resistance we are facing, okay? And then after that, again, it came down. See where it came down to? Previous price structure. It came down to its previous price structure, and it is holding there, and it pushed back up. But it did not go all the way up, or it did not break out, but here again. So this is the area which we were not able to cross the second time. And third time, this is the area which we were not able to cross the third time. So right now we are again in this area. Now, if the price wanted to go up, this is the area. This is the area it is having trouble with to go to. So it will need a lot of energy to push through this ceiling in order to break out here. Okay, but once it does, probably, we are looking at new highs and, some numbers there. But if it breaks down here, then, there's a lot of, the last support was here, like 3650 or so. And in between, there is some other support. So basically, currently, this is the deciding line where the price is, and below this or above this. Right now, again, it is just noise here. So I had sold a iron condor again yesterday. As I was saying, I had a XPX trade. I had sold it above this, and I had sold it. I did not sell below this, but I had sold somewhere below here. Yeah, I had sold below here, and today almost it had come to my my strikes, and that's where I did the adjustment to my options. When I knew that it is losing that, I was watching that 3867 on the ES. Once it lost that value, I know that it wants to come down at least some to the pre-market value was 53 or 54 low, or 55 on the ES. So I took out my short leg on the put and rode the long. Now I was short on it, but and then I exited my long put at the break even. So say I bought back the short leg for $10. So if I sold the put for $10, then I keep the credit. So that was a good trade. If I had stayed in longer, I would have earned $3 to $3 more. But today I didn't have time. And so I just, booked the credit I had. So this is how you do it. And this strike, I'm assuming that the price is still below 39.50 or 39.40. So this is still going to be worthless. So we are good over there. And the other thing, important thing, which we are, I'm always talking about is volume. Look at the volume. The volume is going to tell you a whole big story about what's going on, whether whether the price is getting ready to make a move or what's happening. Okay, so this is SKLZ. See this big volume which came in, and then sideways. It did nothing. After this big spike of volume, nothing had gone on for days, and then some in between spikes, and price is So gradually the volume is increasing and the stock price is also increasing. Then again, it had a big spike, big spike here, sold off. So since then, nothing is happening on the, so this line here, it's a 50-day average on the volume. So I see that, and the price is consolidating under the 50-day, and when it finds that right time, holds this area, and this, if you were doing Fibonacci, which I do most of the time, and if this low is held, and if this is, so it came to 618, and let's say this is a good low, then this could potentially go back to 45 or 50, 45 to 50 even, okay? So, but then you will see a spike in volume. That's when you know that, okay, let's stop. So once it does that, you see a volume a little bit higher than this or above 50-day, you know it's ready to move, and you take that shot and then go up. Or right here, you can take a long with the assumption that it's going to hold the low. And guess what? See, 50-day is at 24.66, and the price right now is at 30 something. It made a low of 30. So it's a good shot. It's a good shot with a stop loss of approximately $4. Worst case, you will, the moment it settles below, you exit that, you are stopped out. And then, you're good. But again, this is earnings coming in 10th of March. So that's one caveat you need to be aware of, that do you want to hold it for, if you are a trader, then you need to think whether do you want to hold it for earnings or you want to exit before that. So that for a trader, that those events can be important because if the stock settles below this, then you will get stopped out, and you would lose that. But if, say, let's say today is 3rd March, and before 10th March, the price moves up here, you made $3-4, and then again, that's a decision point. You can keep a stop loss at your break even of your, or you can take some off here. Again, maybe say 50% you put off here, and then let the other 50% run to see if this resolves to a higher side, and then your stop loss can be your buy point where you bought it. So worst case scenario, after market, the stock wants to push down, you are stopped out. So you made 50%, you made some profit on your 50% of the share, 50% you got stopped out. But again, if you were an option trader and you decided to hold it in a long position and the stock resolved to downside, tomorrow your options would be worthless, zero. Depending on how low it goes. The IV crush, implied volatility, that acts big on the options, especially on the events like FOMC. If you notice, FOMC happens on Wednesday. So on Wednesday, so if you notice, FOMC, XPX, SPY, QQQ, other ETFs, the market, the index ETFs, they have a high volatility till 11 o'clock, because 11 o'clock PST, sorry, because the FOMC happened 11 a.m. PST. So by then, you'll see the premiums are still very okay. They are not moving much. So if you had a credit spread, then that credit spread would not lose the value. Why? Because the implied volatility is very high because of an event. The Fed is going to talk, and that moves the market. So once Fed started to talk, and let's say they had a very dovish tone, then you would see a spike up. You will see XPX spiking up like this, and your calls would benefit. And if you had a PCS, it will immediately lose the value. Say it went to 20 points, your PCS would lose 50% of the premium, and you're good. But then next reaction would be to the downside, because again, big spike out of the bounds, it comes back. That's the action and reaction on FOMC days. When it comes down, so at the highs, whatever it does, I generally sell a call spread, a little bit OTM, not very close, because again, it's an event driven, and anything it comes down 5 points, 10 points, my CCS loses value. Or if you had a straddle on an FOMC, you're buying a put and equal value, equal strike, same strike call. So when it pushes up, it can benefit. So those are the mostly things to play for a earnings where it can make a bigger move. So let's say SKLZ has an earning and you bought a straddle. So let's say the price today is 9th, and tomorrow morning it reports the earnings and it's $32. So you bought a straddle at $32. So, and it costed you say $4. Now the stock on one side needs to move enough to give you profit more than $4, because your puts will lose all the value and your calls will gain. But SKLZ need to move big enough to compensate for that puts in order to reward you in the calls. So stocks like Amazon or Facebook or Apple, where they move big on earnings, generally speaking, straddles may be good. But let's say if they did not move, like Amazon did not move for the earnings, then the straddle would lose the value right there, because the IV crush would, so you bought it for $10, it's possible that it may still be at $10, or it may go to $8 or even $5 because of the IV crush. So it's not guaranteed. So it all depends on the move the stock is making. Based on their expected moves, we can see how it is going. Again, Netflix. Let's look at Netflix. So this is the daily chart of Netflix. And our guy is just hanging in here, okay? It's been strong. I mean, it did a big move to after earning 600 something, or did it go out of six? No, it didn't touch 600, just under 600. And this is the biggest area where it's having an issue, 563 area. It's not able to do anything above this, but it is still holding this 463 here. So it's a 100-point range. It is going into doing nothing. Again, for option traders, this is an IC iron condor right here, or you on a smaller time frame. On a smaller time frame, you can keep going up and down, scalping. This was a good scalp. The moment it pushed down here, this was a good reward. But other than that, it's just not doing much. So technically, it's a good scalping opportunity. But look at it. The earnings are coming in next month, 19th of April, or at least middle of the month. And it is just consolidating right here, right? So let's see. It is generally also holding this 50% of the box. Let's say among these two values, it's still still good here. So as soon as market settles, it finds a direction. Let's say today the market settled and it doesn't want to go down anymore. Just an assumption talk, speculative talk, and Netflix is here. I can go long for the earnings play. Because right now the IV would be less because the markets are down. So the call positions would be, so the IV would be better. So I could put on a trade here, say maybe 625 call or 650 call, or some kind of a spread, call debit spread. I could take 600 to 625. And if it is say $5 or so, that's a good bet. My stop loss would be below this, because below this is a little bit bearishness to this one. So if the price closes below this, I exit out of my trade. But once the market settles and the earnings season starts, what if Netflix breaks out from here? So I had a target of Netflix for 625 to 677. What if it does that, right? So that's a good RNR right here, risk to reward. And, and your loss is also contained. Your loss is also contained here. So this could be a good speculative play. If NQ Nasdaq has settled and ES is settled and the low is in, a good bet to make here because your stop is not that far away. And I hope we are doing good on time. So what I can do here is, David or the audience, ask me whatever you would want to ask, if you had any questions, or if you want me to look at a chart, why don't you, give me a chart and we'll look at it right here and see, if it makes sense to you. David, where can I see the questions or
Hey, Nargis, this is Anka. I can read the questions for you if that's okay.
Yeah, sure.
Okay, so we have Sean that is asking about ticker symbol OCGN.
Oh man, this is an everyday talk in our trading room. This has been dissected so much. Oh my God. Okay. Even in my sleep, so oops, this needs to go. So OCGN, I guess somebody had brought to my attention in our chat room, it was under 30 cents or something like that. And it's because of the vaccine, they deal in the vaccine and all that. So price had gone up. So here it's a penny stock, nothing happening. And then the price moves up and price is above 10-day. It consolidates, big sharp move to 2018. So when we had the trade, this is where I had asked my folks, if you had it, I had given a target of 19, say, put an order for 18.50 and exit there. And since then, it came down, pulled back, because again, this is an unrealistic move for a penny stock in a few days, from 35 cents, 50 cents to $20. That's lot of 1,000% in my opinion, right? So what happens is, once it makes this explosive move, it doesn't have any energy to go. And it has, so again, one thing which I almost forgot to mention is, I do GAN study, or rather I analyze my stocks or the markets based on GAN, WD GAN. You can Google him for the who is he and all that. So I use his theory, and his theory is mostly price cycles, or definitely that things move in angles, or they respect the angles. Basically, the earth, it's a 360 degrees, and if you divide that earth into number of parts, it will always have an angle, 45 degree, 90 degree, 135 degree, 270 degree, all that. So the price moves based on that. So based on that, you derive a price cycle. That's why I said that Netflix had 677 price target. So it has the potential to still go there. So this OCGN, the target was coming around here. It came down, and see, and then you use some Fibonacci to see. So from there, from this move, it came down to almost 618, from up to down 618, from up to down again 618, and see what was the high here, 13, 14, yeah. So almost $14, exact to the dot, $14. Now, this is your ceiling. This is your ceiling, and if it wants to move up and it still has the potential to go up, it needs to break this first. Else, it may again come down, fade, and come down to here. What's that, $5? Yeah, 50 MA. So at some point, this price will need to come down and touch this line. Okay. Now, doesn't necessarily mean it's a moving average, right? So today it is $5. So price may waste its time here, here, here. Every day it would go, like this, and bring this line up till here, say, support, or probably up till here. So this area would now act your support. So price is again ranging in this box. So you have to look at what's happening below this and what's happening above this. Right now, this is no man's land, but for a day trader, enough to, make some few cents on this every turn. See here, right here, go long because price went up. This gave you a good chunk. This was $8 and this is $10, $2 profit, exit, price came down, consolidation in this area, moves up, go up, take $1 or $2. I don't know if you can short this stock, but the next candle was red. So your stop loss would be just below this candle and let it come down. Again, this area, nothing is happening. Again, it is here and here. Again, this box is there. So you put a price just above this. The high was 10.19, 10.34. You can put a buy order for 10.35. And I don't know if it would fill in the pre-market, but let's assume it does. You would got it filled and then you would have ridden it for $4. Or if you could short it, then look for it below this. So this, but you know what? One important thing is for every stock you're looking at, be aware of the bigger trend. Daily is your good trend where you know what the stock is doing. It's above all the moving averages and, so the trend is bullish. If it is below the moving averages, there is bearishness in the stock. Not necessarily the trend has reversed, but as I said, it always comes back to the mean, takes a rest and all that. So, but the weekly chart will also tell you, where we are on a regular basis. See this? It formed a bear flag and boom, down here. So you would again look for price settling up, but then for so many weeks, it did nothing and it popped up above 50-day. Nothing, 50 days right here, nothing was happening, nothing was happening. Here it popped up above 50-day and you could have gone long here. And or if not there, then you could have gone long here because price always comes back to test it. It tested here and then this was what, I don't know, 40 cents, 30 cents, whatever, $1 maybe. And then, it gave you good return, 1800% return and you're there. Let's go to monthly. Oh my God. A lot of noise. Oh, wow. This stock, did it really trade at 800? Okay. So see, this now is price is above 10-day. Your 10 value is now 169, 170. This has the potential to go to 50. Okay. Considering it will return to its mean and goes to, but it depends on how it goes. If it's again does nothing for a few months, then it will keep pulling this down. This 50-day MA will come down from 50. It can become 20, 30, 20 or something. So depends on how fast it moves on the monthly. Your 50 can be the target or below 50 can be the target. Sounds good?
All right, there's one more question. Tesla.
Okay. Tesla, yes. So Tesla 901, I had a price cycle target. It completed its price cycle target. So this is your 90. So on my Twitter, on my pinned tweet, I had to put down the targets for the markets and most of the bigger stocks. Tesla, Amazon, Netflix, everything else. See, it moved. It did a high of 940. Just a 60 cent less to 901. And since then it's below. So I had like below 841, it will have the bearishness to come down to 750 to 650. And the low was around 619, right? Now, one of the things which you need to see is if you were thinking of entering Tesla in a long term, this is your 10-day, okay? When it made the high, the 10-day was at 420, 421, let's say, and the price was 901. that's a $400 difference from your 10 SMA. That's a lot of pressure on the stock, which means it has exhausted most of its space, let's say, to move to. Now, if it wants to move to the upside, the move will be very poor because you have climbed the Everest and now one more hill is remaining and you don't have the energy. Why? Because see this distance. Always look at this distance. If this distance is very big, then stocks, after hitting a certain target or certain resistance, may just waste some time in that area, in that range, or come down to the mean on the daily to reduce this distance. Unless this distance is reduced a little bit or considerably for a stock to move normally, it will just be so Tesla, this is the range now here, and the 10 SMA is now 520, 525. Okay, almost reduced a lot. This is kind of 100 points is kind of normal for big stock like Tesla. So possibly in the coming days, it may make a move if it has, if 650 or 600 is the low. So watch out for this. And again, the price is below this. The price needs to at least be above 701 or 703. 703 is my level. On a consistent basis to retest the high. We will always retest the high first before a new high can be made. So that high, whichever it has made, the 901, at some extension, considering from 50% to 100%, it can test. So Tesla can go back to, let's say 850, 800, 850 or something, somewhere, 50% to 618, and then decide whether it wants to move higher. If it starts to fail there or starts to reject at some percentage within the high, then it's a possibility that it may not do anything or it may pull back. So for now, look for this area to hold or move out of this range. Above 703 or below 600, 619, 620, whatever the low was made. Okay, does it make sense? Hello, okay. So guys, this was it. If you wanted to look me up on Twitter, it is Nargis007. I post most of my technical analysis there on the markets and a lot of stocks. I post my price cycle targets based on those. Like Roku, I had posted a target of 400 when it was under 200. And so on a longer term, it can be beneficial provided it, you know, holds the certain criterias. Amazon, again, Netflix, all the bigger stocks. And, you know, for the smaller ones, as not smaller ones, sorry, the newer Momo ones. So one thing which